Okay, so today, first of all, I'm gonna title the series "Getting to the Bag." I'm gonna teach y'all different ways how to get to the bag overall. Last week I was talking about how to purchase your first building or home in general. And I mentioned one of the requirements was credit. So today we're gonna talk about credit. I'm gonna teach y'all how to get your credit right. That's pretty much everything pretty much I know in credit, or just about everything I know in credit. If you got any questions after this, let me know. Hit me up. But a little bit about myself. Not to say I'm a credit expert or anything like that, but I got over $100,000 in access to credit if I really needed it. If I need to pull it, I got it. As you start to build other businesses and whatnot, it really does help if you have access to capital. So, like I said, I can pull, really, if I really wanted to, $80K if I really needed to. It might hurt my credit score temporarily until I pay it off, but I could pull it if I needed it. So I'm gonna teach y'all what you really need and what credit consists of. So this is gonna be a breakdown on how credit works, what it consists of, different tips, and here we go. Okay, credit. First of all, what is credit? Credit is basically like your financial resume. Credit consists of a FICO score. Pretty much, it's how you vet yourself in terms of your finances. Or how you handle money. So banks don't trust your back. They need to see a history that you demonstrated that you can actually handle money. So in getting a property, they want to make sure your credit right, just to make sure that financially you are capable of handling a loan. So what this consists of, 35% of it consists of payment history. Do you pay on time? 30% of it consists of credit card utilization. How much credit do you use? 15% of it consists of length of credit history. How long have you had credit? 10% of it consists of accounts. How many accounts do you have? And 10% consists of inquiries, new credit. Like how often do you pull credit? Let's say one of these is messed up. So let's say your payment history is messed up, or your credit utilization, how much credit you're using, is messed up. Overall, these are little things you can do. Like, how do I improve my credit? Pay on time. If you can't pay the full balance, always at least pay the minimum. Emphasis. At least pay the minimum and pay it on time. You always, if you can, pay the full balance, but minimum pay the minimum on time. Only borrow what you can afford. If you know you can't afford it, don't buy. Especially if this is just some personal type stuff. You trying to get them new shoes. You know you can't afford the $300 shoes right now. Don't buy that shit on credit, bro. Just hold off. And overall, if your credit score ain't where you want to be right now, be patient. It's going to get there. This credit stuff take time. But if you lack the patience, trade lines and authorized users are your friend. You can purchase trade lines and you can be added on as an authorized user. I'm going to talk about that a little bit more in a second, but just keep that in mind, because credit is just not for buying a home. You need your credit if you want to buy a car. Anytime you need to pull a loan, or anytime you need to prove that the money that you borrow you can actually pay back. So, like I said, I'm going to talk about trade lines, authorized users in a second. And then consider credit repair methods. Let's say, your credit is really messed up. You got a couple missed payments on there. A couple accounts and collections. Like I said, you probably need to consult a credit repair specialist, or bankruptcy, or Chapter 7 or 11. I'm not going to go into all that. Y'all can Google it yourself. Google's out here, it's free information. But like I said, there's tons of people out here that do it. You just got to vet to make sure they're okay. But like I said, that's a method you can go about it. And I'm going to give y'all little tips. A few tips are, the more credit you have, the better situation you are. So you always want to stay below 30% utilization. So if you stay below 30%, you're usually okay. Ideally, you want to be below 10, but 30 is deemed cool. That's what the bank's really looking for. But 10% is the best. You feel me? Example kind of would be, $100 use of $300. Let's say your credit card limit is $300. If you use $100 of that, you kind of in bad shape. You just use 1/3 of your whole credit card. That's a little bit over 30% of your credit card. But if you use $100, you got a $3,000 credit card limit. You straight. You feel me? The bank's gonna look at that. They're gonna be like, if they look at this one, they're gonna be like, oh well, why are they using this much of their credit when they only got $300? You're gonna be deemed not worthy of them providing you with extra credit because they see that you need too much of it. Whereas you only use 100 of it, of $1,000 limit, $3,000 limit, it's going to be more worthy of them allowing you to borrow additional money because it's not like you need it as much. Credit is always, it's all about how much you need it, because in general, if you need, the more credit you need, the less they willing to lend to you. But the less you need the credit, the more they willing to lend to you. It's a weird relationship. That's just how it works. Like I already said earlier, always pay on time. Bottom line, no matter what, always pay on time. If you can only pay the minimum, but always pay on time. Then buying a trade line or getting added on as an authorized user to a credit card, like I mentioned that earlier. Buying a trade line is equivalent to an authorized user. Pretty much what you would be doing is being added on to somebody's credit card, and since you added on to that credit card, let's say they had that credit card open for 5 years, well, that just extended your length of credit history by 5 years. So instead of you being a new credit user, you only have like a year's worth of credit. Well, once you get added on to somebody's credit card, now they 5 years go into your credit, and now you got 5 years of credit history. Or if they got 25 years, they done had that account or credit card open. They add you on the authorized user. Now you got 25 years added on as you. But you want to be careful because you want to make sure that their utilization on that credit card is low, if not almost zero. Because like I was explaining earlier, if they got this shit going on, it's gonna fuck you up. Okay? Because now, where was that? Credit utilization is gonna be messed up. So you want to make sure that their balance is low before they add you on as an authorized user. Like I said, you can pay for a trade line, which is, like I said, same as the authorized user. You can have a family member or friend add you on as an authorized user, and then you would get their credit history. Just make sure this is right first. And then diversify your credit accounts. Credit pretty much consists of revolving and installment payments. Revolving lines of credit are credit cards. And lines of credit, like you can pull a line of credit, a credit card. It's revolving because you pay it back and then you can use it again. You can pay it back and use it again. You can pay it back and use it again. Where installments are actual loans, so car loans. Once you pay it, that's it for the loan. You will have to take out another loan in order to have that on your account again. And then mortgages, another line of installment payments. Another tip would be minimize your increase. I don't know why I put that twice, but minimize your increase. Pretty much, increase, like I said, are how many times they run your credit for new accounts. The least amount of increase you have, the better, but they drop off after 2 years. So you're going to run that shit all up at one time. If you run up 8 inquiries and 10 inquiries at one time, it's going to drop off in 2 years all at the same time. So do it all at once. And another tip I forgot to put on here would be keep accounts open. So let's say you had a problem with spending your money or with credit in general. So let's say you always used to use that credit card over and over, and you ran it up, and then finally you paid it off and you feel so good, so you say, oh yeah, I'm gonna call the credit card company and close that account. Do not do that. That affects your length of credit history and your credit utilization. Once you close those accounts, this decreases. It's like the average. So let's say 10 divided by 2 is 5. Well, 10 divided by 1, because you only got one account now, is 10. That's probably not a good example, but overall, what I'm trying to say is that if you close an account, it decreases your credit history. So the less credit history you have, the less they're willing to lend to you. Where credit utilization, same thing. Let's say you close an account and that credit card had another $3,000 on there, right? You just cut your credit utilization or how much credit you use in half by $3,000. So instead of you being able, for this example, let's say you added these two up, right? So you had 3,300 amount in credit. Well, you cut out this 3,000. Well, now you only got 300 to use. So never close your accounts. Always leave them open if you're not using. Let's say, like I said, you paid off that credit card. Well, just cut the credit card up, but keep the account open. What I would do, I would just put the credit card to the side and maybe use it every now and then for a small purchase, but never close your accounts. But yeah, overall, this is how credit works. If you got any questions, just let me know. Like I said, it might have got a little messy at the end, but I hope you get the gist. If you don't, like I said, please ask any questions. DM me. As an adult, another quick tip: please get a credit card. Every adult should have a credit card. Just you got to be responsible with it, but everybody need a credit card, bro. It ain't play money now. It's real money, but the more capital you have access to, just in general, the more that they can see you responsible with dealing with money, they more likely to give you more money. And then once it comes to buying that house and your credit score up, you ain't got no problem. Shit, you get what you want.